Avusheni Tamanini Sanbonani. My name is Joel Jones Serrani, a lecturer at Ehlanzeni TVET College, Mapulane campus. I'm teaching generic management, financial management, level 4. I'm gonna touch topic 3, which is about interpreting basic financial statements. When we interpret the basic financial statement, the first thing that we look at the purpose of the financial statements. In this module 9, we are going to look at the purpose of the income and expenditure. The purpose of income and expenditure, the purpose of income and expenditure statement is to state the income and expenditure of the business operation by comparing our incomes and expenditure to determine the profitability of the business. The income and expenditure statement can be presented or produced. It depends on the size of the business. In big organization or in large organization, income and expenditure statement are drawn up monthly or quarterly as board of directors will be interested to see the performance of the business. In small businesses or small organization, income and expenditure is likely to be produced or prepared annually through only under a certain circumstances whereby the income and expenditure can be prepared monthly in a case where it is needed somewhere, perhaps by South African Revenue Services or other institution that may have interest in the income and expenditure of the business. Source of income and expenditure. The source of income and expenditure form the basis of, for the last 3 different financial statements, which are your income and expenditure statement. It may also be the budgetary control statement and the cash flow statement. These are the 3 financial statements in a business. We are going to use the following formula to do the calculation of the turnover performance to check the performance of the business. The turnover performance ratio, in formula it says turnover for the year minus turnover for the previous year divided by turnover for the previous year, we multiply by 100. That is the formula to calculate turnover performance ratio. We also have to calculate the ratio which is called the cost ratio. The cost ratio is divided into 2. We have direct cost ratio and the overhead ratio, overhead cost ratio. In direct cost ratio, the formula to calculate direct cost ratio, it says the direct assets divided by the turnover or a sales for the year multiplied by 100. In order to calculate the overhead cost ratio, the formula, it says the overhead cost divided by the sales or turnover for the year. We also have the profitability ratio. In calculating the profitability ratio as well, it is also divided into 2 ratios, which is gross profit ratio or percentage and also the net profit percentage. In order to calculate the gross profit percentage, we say gross profit divided by the sales or turnover for the year, we multiply by 100. In order to calculate the net profit percentage, the formula says net profit divided by the sales or turnover for the year multiplied by 100. That is the formula we are going to use in order to apply or using these formulas using our income and expenditure statement. Let us look at the scenario here. The scenario is the income statement of a new venture for the year ended 31st December of 2020. So this scenario, we are going to calculate check the performance of the business in relation to this income statement. Good people, let us look at our income statement, which is composed by 2 consecutive years. Is the income statement for 2 consecutive years, which is 2019 and 2020. We have turnover, cost of sales, we have our gross profit, and then we have our other expenses, we less our other expenses, which is direct expense and the indirect expense, then we get our net profit. The question that we are going to look at as we calculate the performance using the formula or using the requirements on the possible questions. The calculations for turnover performance for 2019 and 2020. That is the question number 1. Question number 2, calculate the profitability ratio for 2019 and 2020, which is the gross profit percentage and the net profit percentage for both years. And then the last question is calculate the cost ratio, which is the direct cost ratio and the overheads cost ratio. So we are going to compare these 2 years to check the performance of the business. We are going to use these 2 consecutive years, which is 2009 and 2019 and 2020. Let us go back to our table and apply the formula using the calculation. Let's calculate the turnover performance ratio using the formula. The formula says turnover for the year less turnover for the previous years divided by turnover for the year multiplied by 100. I want to use the abbreviation because we should start by writing the formula always when we write our examination. So we will say turnover for the year, turnover for the current year minus turnover for the previous year. We divide by turnover for previous year, we multiply by 100. Turnover for the year 2018 is 104,000. So we are going to use this information from the previous year as the formula says. So we start with 2019, the performance for 2019. It says turnover in 2019, it's 109,200, and then we subtract the turnover from the previous year, which is 2018. We say minus 104,000, and then we divide this by the previous year, which is 104,000, and then we multiply by 100. It gives us 11.45%. It means our turnover for 2019 is the turnover for 2019 is 11.45%, and then let us do the 2020, the turnover for 2020. In 2020, we have 110,400, which is 110,400 minus the turnover for the 2019. We subtract the turnover for 2019, which is 109,200, And then we divide this by 109,200. We multiply by 100. And then let us calculate. We use the calculator. It will give us, let me check. It's 12.89%. Is 86%. Is 12.86%. So what we are going to do here, we are going to compare the two, the performance for both years. When you look at the performance in 2011, is less than the performance in 2020. In 2019, we had 11.45%, but in 2020 we have 12.86, which is more than the previous years. So the question is, how does this business perform? This business is performing well because there is an increase in the turnover of the year. It means the business is increasing its sales from one year to another. So let us also go and look at the calculation for the profitability ratio. In profitability ratio, we said there is a gross profit percentage and the net profit percentage. Let's start with the gross profit percentage. In gross profit percentage, the formula says gross profit divided by the turnover. So we say gross profit percentage, it says the gross profit divided by the turnover multiplied by the 100. So we'll say the gross profit divided by the turnover multiplied by 100. So we multiply by 100. So we are going to replace using our income and expenditure. We are going to just to substitute, checking the performance of both years. Now we can use the formula to calculate the gross profit percentage, which says a gross profit divided by the turnover multiplied by 100. Then we are going to look at our income and expenditure statement or income statement to calculate the performance of our gross profit or gross profit performance. So the gross profit, the formula as it's indicated, we say our gross profit is 78,700. 78,700 divided by our turnover, which is 109,200, and then we multiply it by 100. So let's calculate. We'll say then it's 10.89%. In 2020, this one is 2019, then in 2020 we are also going to apply the same principle, which says gross profit divided by turnover. Our gross profit for 2020 is 78,200. So we say 78,200 divided by our turnover for 2020 is 110,400. So we will say 110,400 multiplied by 100. It gives us 11.06%. What is happening is the business is making progress because in 2019, the gross profit has increased in 2022 11.6% from 10.89%. So it shows the business is progressing, the business is growing. So we also have to calculate the net profit percentage. In calculating the net profit percentage, the formula will say the net profit divide by the turnover for the year. Divide by the turnover, we multiply by 100. Let us calculate the net profit percentage for 2019. In 2019, we are going to say our net profit, as you can see on the income and expenditure statement, it says we have 54,310. So we will say in 2019, 54,310 divide by our turnover for the year. Remember, it's 109,200. Is 109,200, we multiply by 100. Let us do the calculation. For the turnover, it's 49,73%. It's 49,73%. Let us look at the gross profit. Let us look at the gross profit percentage in 2020. In 2020, the gross profit, our net profit is 51,210. Our net profit is 51,210, which we divide by our turnover, which is our 110,400. Is our 110,400. And then when we calculate using the calculator, it gives us 46,39%. So when we compare, we look at in the year 2019 and 2020. The difference, it means it's our gross profit, net profit percentage performance in 2019 is 49,73%. As to in 2020, it decreased to 46,39% or 39%. And it means our gross profit has decreased. This business is not performing. It drops the income in terms of the profits, the net profit, it drops. So the business is not performing well. That is how we measure the performance of the net profit. And then going forward, let us calculate using the profitability ratio. Calculate the gross profit percentage. The gross profit percentage formula, it says the gross profit divided by our turnover. You divide by your turnover, you multiply by 100. Then let us look at our income and expenditure or income statement. Our gross profit is 78,700. 78,700 we divide by our sales or turnover of 109,200 and we multiply by 100. Then the answer will be 72.7%. 72.07%. The gross profit percentage for 2019. This is 2019, and in 2020, our gross profit is 78,200. 78,200 divided by our turnover, which is 10,000, 110,000, 110,400. We say 110,400, we multiply by 100. Then our answer will be 70.5%. You say 70.05%. What is the meaning of this? When we compare the 2019 and 2020 performance, to me it says the business is not doing well, because in 2019 is far much bigger than in 2020, which means the business is not doing well. So let us do the direct, the cost ratio. As I indicated, that the cost ratio is divided by 2, which is the direct cost ratio and the overheads cost ratio. Let's start with the direct cost ratio. The direct cost ratio formula, it says our direct cost divide by turnover for the year. Turnover for the year we multiply by 100. Let us look at our income statement. How much is our direct cost? We have a direct expense. Direct expenses is in 2019. Let us do it. 2019. Our direct expense is how much? Is 12,500. So we say 12,500, which is our direct cost. We divide by our turnover for the year, which is 109,200. We multiply by 100. Then it gives us 11.45%. It gives us 11.45%. Let us check in 2020 how is our direct cost perform. In 2020, we are going to say our direct expenses of 14,200. Our direct expenses of 14,200, we divide by our turnover, which is 110,400. We multiply by 100, which give us 12.86%. It gives us 12.86%. So what does this mean? When we analyze this, it tells us that our business is also not doing well, because the direct cost for 2019 and 2012. In 2012 is more than the 2019. It means our direct cost has increased, which means when the direct cost increases, it's going to eat on our profits. That means the business is not going to make enough profit because of this cost, the increments of the cost. So it simply means the direct costs are increasing. So let us go back to look at the overheads ratio, cost ratio. In terms of the overheads cost ratio, we are going to say our overheads, this is the formula, it says the overheads cost we divide it by the turnover. We divide it by the turnover, we multiply by 100. How much in terms of the overheads? Let us look at the overheads in 2019. The overheads in 2019, we have indirect expenses. Remember, when we talk about the overheads, we are talking about all manufacturing costs except the direct cost. So, which is the direct cost, which is the direct labor and the direct material. So let us look at our indirect cost, which is the overheads. Our overheads in 2019 is 11,890. 11,890. We divide this by our overheads, our turnover for the year, which is 109,200, multiply by 100. Then when we calculate this, it gives us 10,000, not 10,000, is 10,89% or 10,89%. So in 2020, we are also going to say our overheads is 12,210. So we will say 12,210 divided by our turnover, which is 10,400. We multiply by 100, which is going to give us 11.06%. Let us compare the two and check if the business is doing well. When we look at the 2019 comparing to 2020, in 2020, the overhead cost has increased to 11.06%, which means the overheads has increased, and this means the business is not going to make enough profit, since the overhead is also going to eat on our profit like our direct cost. So that means the business is not doing well. Let's do the turnover percentage ratio. The formula to do the turnover percentage ratio, it says the turnover for the year less the turnover for the previous year divided by the turnover for the previous year, multiply by 100. So let us write it. In 2019, the turnover for the year is 109,200 minus our turnover for the previous year, which is given as turnover for 2018, which is 104,000. So we say less 104,000, we divide by 104,000, we multiply by 100. And then the answer will be 5%. It gives us 5%. And then in 2020, we say the turnover for the year, which is 110,400 minus 109,200. We divide by 109,200. We multiply by 100, which is giving us 1.10%. This is the calculation of turnover. And when you check the performance of our business, it shows there is a decrease in the performance of our turnover in the business, which is not good for our business. Ladies and gentlemen, for further information, you can follow us at our website www.ehlanzenicollege.co.za. Facebook, you can find us as Ehlanzeni TVET College. You can also find us on Twitter at Ehlanzeni TVET, and also YouTube, Ehlanzeni TVET College. Thank you.